Hello, my name's Justin Urquhart Stewart, and those who've been here before, welcome back. Very good to see you. And those who haven't, you're very welcome. This is the opportunity I have every so often to actually give you my views as to what's happening in the economy and the markets and give you some idea of what should be happening. Perhaps this week, though, can I just go back a few days? Because I think it's important information that we had last week, which I think a lot of people have found really rather misleading. And that was on Friday. In America, we had, in your own place, the non-farm payroll figures. And trying to explain those to people in Europe is actually quite difficult. The nearest I've come to it is actually saying it's unemployment without the Waltons. For those of us of a certain age, you can remember that rather tedious series, basically unemployment without the agricultural side of it. And these weren't just good figures, they were astonishing figures, because everybody thought it was going to be absolutely appalling. It wasn't, it was actually positive. It was so positive that a certain individual came out of his bunker and actually made some amazing announcements about how brilliant his policy had been. My apologies, I should not be rude about your leader. I can be rude about our leader, I suppose, in Britain, but that's another issue. But certainly the comments being made that actually all was now, the worst was behind us, that actually all the work being done has now actually showing positive returns, and to an extent, finding yourself creating 2 million jobs was actually a very positive issue indeed. But it did highlight actually the American way of quick hire, quick fire. So hopefully there's going to be more hiring going on. The question is, are we actually still going to be seeing the level of hiring? So those 21 million people who lost their jobs in the past 3 months will find themselves all employed again. I think that's actually quite doubtful. But the point is this, this is a positive news, and we've seen the markets react. Now, we saw the Dow up 3% on the day, and whether it's the NASDAQ, the S&P or the Dow, there are no losses on the year, which is remarkable when you think about it. And in stock markets, actually, that often happens. Go back to 87, that's what occurred then. There was no crash in 87. Why? Because year to year, the graphs didn't show anything. But this time it is different. Why? Well, because it's a different sort of economy, and those different people participating in the economy. China, whether you like it or not, is a key part of the capitalist economy. Given the fact it's a strange communist nation, that does seem rather odd. This is very different from the days of Russia. Russia was a superpower to an extent, but it wasn't an economic power. It's even less of an economic power now. It's certainly not a superpower, probably a dangerous power. But China's different altogether. Economically, it is vital to the rest of the world. So we need China participating in it, and we need to find a way of actually managing it with them. Now, the good news is, of course, because as Americans, you're naturally optimistic, and that's very encouraging. As Brits, of course, we tend to be the opposite. You tend to think the glass is half full, we tend to think the glass is half empty, and some of us think it's probably cracked, which doesn't really help very much. So the American attitude is very positive. Action is being taken by countries in terms of borrowing and spending. But we've barely started on this process yet. So what should we be doing as investors? The answer is, in the autumn, we will be seeing the season of storms, and they won't just be meteorological storms. We will be seeing more volatility coming through. Is this the buy on the dips issue that we've been talking about for donkey's years? No, it's not. It's buying with some intelligence. Last Friday's figures, in many ways, could be seen as fool's gold. Only a fool would come out and say, it's all fine and dandy, it's all been resolved. It hasn't. We've got a lot of issues still to try and manage our way through. But by the time we get to the autumn, we're going to see more information, which will allow us a better idea of what to try and do next, and will provide us the opportunity of selectively then going back into this market to be able to buy. That's not to say I'm not invested at the moment, I am. But I've been building up more cash positions. I actually was buying earlier this year in terms of buying on some of those quality assets. So the good news is, I think actually, there are some opportunities, but you need to be patient here. And don't be fooled by the headlines of people telling you that it's all fine and dandy and going to be finished. So some patience here, build up your cash, start selecting those areas to be able to be investing in. I'll come back to those next week, because some of them are going to be more exciting, some of them are going to be quite dull. And there's nothing wrong with dull investing. What we're going to have to get used to, I think, is certainly for the family, investing for the longer period. That afterwards is what equity is all about. If you actually want to have some fun in terms of punting, well, that's why we have horse racing. In the meantime, stay safe, stay well, and have some patience. There'll be some great opportunities. Thanks a lot. Goodbye.